Hi there, good afternoon. You've tuned into ET now, and this is Market Phataphat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And the markets are making their way towards that 18,000 mark. And if indeed we manage to scale that mark in a brand new series today, Vinny, that will be the first time.
Hoping it stays there as well.
Hoping that it stays there as well. And if it touches the 18,000 mark, will be first time since the month of February. So yes, watch out for Nifty slowly and steadily making its way towards the 18,000 mark. Well, let's take a look at what the rest of the markets are doing at this point in time. Take a look at what Nifty Bank is doing, because when it kick-started for trade today, it was definitely underperforming the benchmark indices. You had Nifty Bank that was in the negative territory. As of now, yes, trying to break away from that zone. Right now, trading flat with a negative bias. Key to note is the fact that the broader markets are outperforming the benchmark indices in today's trading session, and mid-cap index is seeing good gains of about 0.8% as we speak, followed by small-cap index. Talking about the sectoral performers, right now you have all the sectoral indices that are in the recovery mode. So you have even FMCG index that is now trading flat with a negative bias, is climbing up from the day's lowest point, as you can see on your screen. PSU Bank Index continues to rule the chart, 1.7% uptick coming in for PSU Bank Index, followed by media, as well as IT Index that are gaining in trade. But what is very key to note is the fact, Vinny, that for now also the market breadth continues to be in the favor of the advances. So hoping within the next 2 hours, we will be able to see the 18,000 at least on the charts today.
Let's hope and wait for that mark coming in, and obviously we'll keep an eye out on that one. But on that note, let's get started with some of the individual movers in trade. In the next 1 hour, we'll be taking you through all the stocks that are buzzing in trade, either on the back of news flows or technicals. On the technicals, we're joined by Amar Singh today, while from the research team, we have Harsh as well as Lisa joining in with us. A good afternoon to all of you all, as well as you, Cheryl, as well. And let me start then with the first stock, and couple of names, obviously GCPL as well as Raymond. Both these are the stocks that have been in focus for the last couple of days. Today also we're keeping an eye out on that, because we have more details coming in here as well. In terms of obviously the GCPL acquisition, they've acquired Raymond consumer care business, which is for around 2,800 crores. And other than that, what they're highlighting is that this deal is expected to be completed by 10th of May 2023. This deal will be EPS dilutive in FY24. But from FY25 onwards, GCPL highlighted in the presentation that it will be neutral as well. In terms of overall, they are expecting a double-digit growth going forward in the long term from this segment as well. So keep an eye out on that one. While in terms of Raymond, what we are seeing coming in is that obviously yesterday we saw a sharp run-up coming in when the announcement was made of the consumer care business being sold. There's another business also of theirs, that is a lifestyle business which comes under Raymond Limited. That is going to be separated out and will be Raymond Lifestyle. That will be branded textile, branded apparel, as well as garmenting business, which will go into Raymond Lifestyle, and that will be a separate listed entity as well. So keep an eye out on both Raymond and GCPL. As of now, both these stocks are under pressure in trade today, Cheryl.
Absolutely, that's Raymond and GCPL for you. But my colleague Anurag Joshi caught up with the top management of Raymond to understand the deal contours, the plans around listing their consumer care arm, as well as the outlook going ahead. Listen in.
Firstly, we have done the divestment of our consumer care business, which you are aware of. And from the proceeds which will come into Raymond Consumer Care, we will divest the lifestyle business, which is the total lifestyle business from the Raymond Limited, and put it into Raymond Consumer Care Limited. Fundamentally, two things will happen. We will create a pure play textile lifestyle company, which is what the market wants. The residual Raymond will have the real estate, where we should become a pure play real estate company. So we'll have two listed companies. And number two, this will help in making us net debt zero. The typical process takes about 12 to 14 months with NCLT. So as soon as all the permissions are in place, we'll be happy to list it.
Shareholders of Raymond Limited who are public are getting shares in the Raymond Consumer Care Limited. Once the process gets completed, the share allotments automatically list Raymond Consumer Care as a listed entity.
We're always going to look at what creates shareholder value. And sometimes you have to let go of a few things to get something bigger. Kamasutra had its place. I'm very passionate about the brand because it was one of my first brands I created. But I genuinely believe that to nurture it to the next level, it's better off in Godrej's hands. They've got a bigger distribution, a bigger FMCG company. We have enough internal accruals to meet all the fund requirements for our growth plans.
All All right, moving on then, let's talk about Axis Bank, and that one came out with its numbers yesterday post the market hours, and adjusting for Citi, the results, if you look at it, it's in line with the estimates. The net interest income came in at around 11,742 crore rupees, which was an uptick of about 33% on a year-on-year basis. However, they posted a loss, like I mentioned, coming in at around 5,728 crore rupees as against a profit in excess of about 4,000 crore rupees. They had posted an exceptional one-time write-off of about 12,489 crore rupees, and this was on back of the Citi acquisition. If you look at the management commentary, the bank is saying they're expecting about 12 to 13% growth for the system, and Axis is likely to grow 4 to 6% higher than that. They're also saying the bank is focused on corporate salary acquisition and premiumization of their deposits. They're expecting to add about 500 branches in the year FY24. However, the street is not too enthused with the numbers or with the commentary coming in for Axis Bank, and that's why the stock, as you can see, is down about 2.5% as we speak.
Okay, let's move on. And Amar, RVNL, that's the first stock that you've picked out for us. Obviously, you've seen that buzz coming in around the railway stocks. RVNL is buzzing today in trade as well. What are your technical charts indicating for this one? What is the level that you're keeping an eye out on?
Yeah, so if I look at this particular stock, so what we are seeing here is that the stock was consolidating somewhere around the 60 mark, and currently it's around 110 odd levels. And that also has happened in the last 6 to 8 weeks. And this particular week has been a phenomenal one for the stock. The stock is up by more than 40%. And it has taken out a very key resistance zone. So earlier 80 was acting as a very strong resistance zone. So it appears that the stock is poised to rally towards the 120, 125 mark. And the trend is definitely very strong, both on the long-term charts as well as the short-term charts. So any pullback in this stock should be used as a buying opportunity. The stock has got now very strong support coming around the 90 zone.
All right, that's the take coming in on RVNL. Remember, this one has been a buzzer of late. Yesterday, the stock did see some sort of a profit booking, but key to note is the fact that today they bagged an order as well, so that one is buzzing in trade. But Lisa, that's not the only stock that's buzzing in trade. PI Industries.
Yes, PI Industries surging in trade, and that's because they have acquired multiple companies in pharma business as well as CDMO space. Well, this ends the long, impending overhang that the company had in relation to its foray into pharma. Because way back in 2020, they had raised funds to enter into pharma business via an inorganic route. However, they also tied up with InSwift Laboratories, but the deal was called off. And now this acquisitions, which they have signed a definite agreement with Terrachem Research Medilab, which is into rare disease, and also Archimica, which is an Italian-based reputable small molecule API manufacturer and CDMO manufacturer, and they have a presence in over 30 global regions. So, well, these acquisitions will kickstart PI Industries' foray into pharma business. The total consideration for the acquisition is around 900 crore, and PI Industry has a war chest of around 2,000 crore. So that leaves them with around 1,400 crore for further acquisitions as well. So the analyst believes that these acquisitions will enhance CDMO capabilities of the company and also will nullify the growth concerns of their other segment, that is the CSM segment. And also they acquire the business at very attractive valuations, and that makes it EPS accretive for the company. Well, the stock is up 9%, but at one point it also jumped around 11%, ending its 4-day of decline.
That's PI Industries, the news flow surrounding that one, isn't it, Vinny?
Absolutely. Keep an eye on that, because surely a big move that we've seen in the stock. And Amar, that comes and features in on your list as well, PI Industries. Are you also quite positive on this one? And finally, a nice run-up is what you're expecting as well.
Yeah, actually, the stock, if you see, based on the recent development, has really breached the 3,200 mark, which was acting as a very strong resistance for the stock. Now, if you look at the stock technically going on the weekly charts, you'll find that 3450, 3450, 3500, that's going to be an immediate zone of resistance for the stock. But the stock is, the way the stock has bounced back on very good volumes, it needs to sustain above the 3,200 mark. That's important. And then once it starts trading above the 3,500 mark, then it could rally towards its highs, which it had witnessed in December last. That was around 3,630 odd level. So that was a major level for the stock. The stock can be bought on any declines. The stock now has got very strong base around the 3,000 to 3,200 zone is a very strong support zone for the stock.
All right, so that is the take coming in on the technical front for PI Industries. But Harsh, Apco Text, this one also is an earnings candidate. How are the numbers?
Well, yes, under severe pressure, Cheryl, we're looking at an operational revenue which has come in at around 256 crore versus the 2775 crore number which it clocked same time last year. That's down 7.7%. EBITDA took a knock of 25%, and margins are down around 3% on a year-on-year basis. All of these numbers. Sequentially, things look slightly better, but not as good as a year ago, and that's clearly reflecting on the stock price today as well. We're also seeing PAT, which is actually down to 232 crore versus the 309 crore that it clocked last year, again down a solid 25%. So on the back of all of that, you can see the stock is down nearly 8% in trade.
Okay, let's move on and talk about one more earnings candidate that we have today, and that is Emphasis. Now, this stock is in focus. Why? Because what you're seeing coming in is in terms of the numbers for the company, the BFSI as well as the US exposure has led something to the revenue miss. In terms of the miss coming in on the revenues was because of that front. Now, other than that, when you look at the numbers on a quarter-on-quarter basis, dollar revenue down by 4%. Revenue in terms of rupee revenue also we're seeing a decline of around 4%. Profits marginally down by 1%, while EBITDA margins have seen a slight bit of an expansion there, 20 basis point expansion for EBITDA margins. EBITDA margins at 17.8% versus 17.6%. Let's keep an eye out on Emphasis on the back of its numbers.
All right, that's Emphasis for you. We have only 6 stocks down. We have plenty more to go. But on that note, we'll take a break on this edition of Market Phataphat. Stay tuned. More on the other side. Don't go anywhere.